Welcome to Mad Money. Welcome to Cramerica. My friends, I'm just trying to make you a little money. My job is not just to entertain you, but to educate and to teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. We've now got 2 trade deal wins on our hands. Last week's deal with Japan and this weekend's deal with the European Union. Despite the market's muted response, Dow slipping 64 points, S&P inching up 0.02%, NASDAQ advancing 0.33%. I think our country ran the table on both. First, let me just say I play with an open hand. I've never been a free trader. Never. That didn't work for a whole group of angry people in this country who saw their jobs exported to other lands. I know the era of free trade brought down the cost of a lot of things, like clothes, like electronics. And that certainly changed people's lives for the better. It was egalitarian. We were able to spend much less of our budgets on so much stuff that used to be genuinely expensive when I was a kid. And that's not nothing. But it also led to the deindustrialization of vast swaths of America, and a substantial part of the electorate felt the sting, not just the virtue of free trade. The central mission of the Trump administration's trade policy was twofold: to bring back jobs to this country and to make it easier for our countries to do business overseas. See, the dirty secret of free trade is that America was the only country that ever played fair with this stuff. I think the president is winning on both counts. He has a much better hand than these countries and possibly the countries after this, because many of the countries in question have used our market as a dumping ground while buying very little from us. When the president comes in to negotiate, he has nothing to lose. Hence why he's getting his way with a 15% tariff on European goods, not so high as to preclude commerce, but high enough to make a difference. These countries won't be flooded with our stuff. They'll still be reluctant. But it looks like something will get bought, including the usual Boeing planes, as well as American natural gas. More on that later. Meanwhile, we'll get the tariff money, and so far, frankly, the cost of these tariffs is mostly eaten by the manufacturers themselves. At some point, though, I guess they'll be passed on the consumer. Not yet, though. Our government showed some real shrewd behavior when it got the European Union to commit to buying $750 billion in energy products from us. That should box out Russia, even when the war in Ukraine ends, which is a big deal, because I was worried that Europe would just go right back to Russians for gas. Looks like that might be off the table. Then there are the totally opaque gifts from Europe and Japan. So $600 billion from Europe and $550 billion in investments, loans, and guaranteed-back loan guarantees from Japan to help support Japanese companies investing in the U.S. Not bad if it ends up helping our country in some way that's productive, although there's no real enforcement mechanism with this stuff. We don't know what the strings attached really have to say. It's certainly better than not having these commitments, though. Maybe the money can be used to fix our nation's crumbling infrastructure. Who knows? So if these trade deals are so good, then you have to ask yourself, why isn't the market screaming higher? Why was the Dow down today? Great question. Let's answer it. First, this is already a fabulous market. It's gone up almost every week since the post-Liberation Day lows. The rotations from tech to industrials to finance to transports, almost perfect. I mean, just wow. The earnings so far have been excellent, totally justifying the rally. The trade deal with Europe might have meant much more, but earnings season has its own pull, quite apart from the event-driven futures. That blunted the advance. Don't get greedy. We are making a ton of money here. Second, there was this prescient article I read this morning about tariff on wheat. There's been drama. There's been brinkmanship. There's been old-fashioned Donald Trump wheeling and dealing to the point where it almost feels like we're watching a nation-sized episode of The Apprentice. But now we get the drill. You get assigned a number, a percentage, some level of ridiculously high tariff. Then you work it down to 15%, throw in some sort of sweetener like a natural gas buy or a big investment, and then you cut a deal. It's a colossal game of chicken that turned into some reasonable, rational decision-making. We hear everyone's a winner. So at this point, we just say, good. We already freaked out about the terrifying Liberation Day, right? Those tariff announcements they were frightening. We already rebounded from those lows once we realized that that was just a negotiating position. At this point, nobody's buying stocks off any trade announcements unless something's radically different, and it hasn't been. Now, they shouldn't be radically different. These are really big deals, but very few understand them. I don't even know if the White House understands what it gets when Japan and Europe promise those billions, sovereign wealth fund, maybe Bitcoin reserve, new factories with robots, who knows? Certainly not me. Maybe the Japanese and the Europeans don't even know themselves. Oh, and let's remember the serial nature of this tariff story, which is so daunting. We nailed down one. We have to then focus on another. EU is huge, but now there's China. There's always a big one ahead. Canada will be very big. Mexico will be very big. We'll be doing this for months and months, hence the ennui. It's just maybe too much. There are only 4 weeks a year where earnings can beat general news, and this is one of them. When Amazon, Apple, Microsoft, and Meta all report in 1 week, they're big enough to defeat the broader news flow, even if the news is positive. In the absence of big earnings, the EU announcement might have had more impact, but not this week. For the Fed meeting, normally a Fed meeting where you don't expect a cut is a yawner. But our president, who had the Fed chief walking around in a hard hat, checking out the renovations at the Federal Reserve, he'll make sure it's anything but a yawner. Regardless of the overall strength of the economy, we're going to see a level of presidential hectoring that will be painful for the markets. No chance to celebrate the EU deal with that ahead of us. Fifth, we got the labor report on Friday. If it's weak, the president will demand an immediate intra-meeting rate cut. If it's strong, well, the president will probably still demand a rate cut. In other words, this week is a total gauntlet. The problem with the tariff story is that it's becoming a gigantic distraction from a terrific stock market, where only Dow, which is a chemical company, and Charter, a cable company, have sincerely disappointed. We do have a lot of meme activity, which is always worrisome, given how noisy and excessive they are, but it was tamped down today. Putting it all together, though, given the run we've had, given that we seem to have a template that our trading partners can live with, given that we have China coming up, China which probably will want the same rate as everyone else, well, it might be difficult. But the bottom line, right now we're presuming these tariffs don't matter. What matters is earnings, unemployment, the Fed meeting, and you know what? Dead last? Tariffs. Now, that may be a disappointment to the White House. It could be fraud. It won't be assuaged by a $600 billion from the EU or $550 billion from Japan. This week is a beast of its own, and nobody on Wall Street is going to care about trade policy until the week is over. Can I go to Robert in New York, please, Robert?
Jim, how you doing? I want to first thank you very much. It's a special week. It's my birthday week, and I want to thank you for making
Happy
it.
Happy birthday, Robert!
Oh, happy birthday to me. Happy birthday to me. Thank God for Jim Cramer. He's made me loads of money.
They're singing that song everywhere, and that's what I love about this great country. Go ahead.
Okay, Jim, it's great to speak to you. Anyway, this next stock is a global investment management firm and a major provider of financial technology. They act as a fiduciary for their clients, managing assets for a wide range of institutional and individual investors. They have a market cap, Jim, of over $170 billion, making it the world's 96th most valuable company. Wall Street analysts are optimistic, and so am I, that this company will continue to keep having double-digit growth. You told us to buy this, and you said long-term hold. December 2nd, go to the videotape, 2024, and May 2nd, 2025. I wish they would split this stock, Jim. Larry Fink is brilliant. BlackRock.
Yeah, Larry, thank you for that. Thank you for that birthday wish, too. I think it's terrific. All right, BlackRock is up in a straight line, Robert, as we know. It got hit. It shouldn't have gotten hit as aggressively as it did. It only sells at 23 times earnings. I say only because it has tremendous growth and there's very little risk. So I think it's a buy. It's come back. It was just last week, it got to 1,130. It's at 1,117. It is. And thank you for those kind words. Now we're going to stick with another Robert. We're going to go to the Midwest, Robert. Robert in Illinois. Robert.
Hey, Jim. Got a question about Kava. I've held it for a while. I made quite a bit of money last year on it. But it seems to be going in really large chunks. The other day it was down 5 points one day and back up almost 2 points the next day. Their earnings are coming up the end of this month, I think. Is there any reason for this wild swing? It's kind of tamed down.
Yes. It's what I call it's a terrible trader. And there's been these big chunks that come for sale, and you have to just close your eyes. You can't watch the trading because it's very, very unnerving. And you want to hit it on a real dip, which you don't have right now because it was down to 70 earlier this year. Wait for more of a dip for Kava, but I think it's a great long-term position. All right, what matters to the market right now is earnings and the Fed meeting. And until we get through this gauntlet of a week, no one on Wall Street is going to care about trade policy. Oh, man, tonight, in yesterday's trade deal, the EU announced its plan to purchase $750 billion worth of U.S. energy. I'm revealing the potential winners from this investment. Then, what the heck is going on with Deckers? The company behind Hoka is sprinting higher And I'm breaking down the earnings report that is me changing my thesis on the name. And another fashion retailer, Tapestry, has found its footing on Wall Street. I'm digging the situation and seeing if this one still has legs. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.